All right, welcome to this week's Monday Market Update. Very weird weekend. I'm going to jump right in this. So I'm going to knock this down here. So national average 30-year fixed rate mortgage, 6.99%. This is going to change. This was captured as of this morning. And this is what I'm alluding to from the weirdness of this weekend. So what happened this weekend was Moody's downgraded the United States credit rating to AA1 from AAA. Now, this has happened before with S&P and I believe another rating. And what we saw was hurt bonds for a day and then kind of recovered the following day. Well, we saw a recovery today, and I'm going to show you this. But this is certainly of note, that they measure on these three things, public debt to GDP, deficit as a percentage of GDP, and then our bond yield. And so bond yield today jumped up all the way to 455, but I'll show you here shortly where we're at now. But we're at 123% of GDP, and then the deficit is over 6.4% of GDP, which when you compare with other countries, it's pretty staggering, particularly since we're not coming off of a recession. We were coming off, a pretty strong economy. And so this was a shock to everyone. Not necessarily the fact that we're in this debt situation, but the fact that there was no real advance notice that Moody's was going to do this. Bond market didn't like it. Here's how that played out. Now, it looks like it's a good day, but we actually opened today down 33. So it was a gap down from here. It went all the way down here. And you can see this floor of support is pretty strong because it held back here and, we bounced off that. And so we did bounce off that today. And we even pushed through this ceiling, if you will, at that point, and then another ceiling. So this has been good. It's likely that we may stay range bound here unless we have some market moving news. And I'll kind of allude to what is on the horizon here. But I wanted to show you how it looked today because it was started out rough based on that news from the weekend. So we started all the way down here at 100.30, and this was the day that moved us all the way up to 100.80. So great recovery today. Rates, are certainly going to look better from when they did this morning, but it was still kind of a shock. And so if we look at the calendar for this upcoming week, what's going on here? There we go. We can see some potential market movers that would get us out of that range bound area that things are trading. This is going to be a fairly decent one here, 20-year bond auction, and then jobless claims. Though these two reports, Wednesday and Thursday, are going to be decent reports that could move the market. So for now, we're continuing this choppy trend, if you will. I don't know why this jumps around here, but it's going to continue this choppy trend that we're seeing, particularly, since tariff is not yet really fully embraced by the market. We don't know where those are going to end up. I just heard recently that Canada has backed off some of their retaliatory tariffs. And so, again, it's going to take some time for all of this tariff conversation to settle down and for the market to see how it's going to impact the economy. So stay tuned for the next update. Thanks so much.